It is at 12:30 on Friday, June 26th. I just made a video for the update, a couple of about a half hour. I haven't posted it yet. I wanted to go out and take my walk before I finish the editing and post it, so you can check that out later. But I just wanted to make another live video. And again, guys, I apologize if I'm not looking at the camera. I don't have a GoPro, and I don't want to be that obvious when I walk. So I'm just holding my camera and looking ahead here, make sure I'm on the sidewalk. But anyways, I'm back home here in the South. It's quite hot out right now. It's in the 90s, but um, I am heading back north on Wednesday next week, where I made my last walking video a few days ago when it was raining. Quite of a climate difference than where I am here. But if you do join the live chat, make sure you say hi. Let me know where you're chatting in from too. I really would like to know where everybody's from. Doesn't look like anyone's joined yet, so I'll remind you again. So I hope so. Just do a little small talk here, and hopefully we get the stream out to a few people. So I hope everybody's doing well. I hope you had a great week. The market today, as you'll see on the video I made, kind of typical Friday volatility. I got some forex positions open that we're in quite a bit of drawdown that I showed, and so that's fine. That happens, but I'm going to hold them probably through the weekend. I'll adjust my stop losses so that uh, if anything crazy happens over the weekend or when the market reopens, I'll be protected. But I'm going to hold them open. So you can check out the video, like I said, that I made earlier. Haven't posted it yet, and see where I'm at. So I'm not going to get into too much of all that today. But basically, today, just to talk briefly about brokers and prop firms. And I guess a couple of questions, just interested to know how many of you are using prop firms, and what do you use them for? Do you use them for futures, Forex, both? And what's most important to you in a prop firm? And like, what are some of the prop firms you're using? There's been a lot of videos on YouTube, especially which I've watched in the last probably 6 months plus, where there's been a lot of prop firms that um, have gone belly up, some really big name ones too. And so, you know, there's no magic bullet. Prop firms are certainly are not for everybody. Um, I would advise anyone that's new to not use a prop firm unless you're proven profitable. I know some people are like, well, you can use a prop firm because all you got to do is pay the fee, and you're not really risking any of your own money. So the worst that happens is you blow the account and you blow the fee. Well, prop firm rules are designed to, it's much like a casino, right? The rules are stacked against you, right? If you are not a profitable trader, uh, or at minimum a break-even trader, and you don't know how to be an excellent risk controller, and you're not willing to take small position sizes to slowly grow your account over time, then you're going to blow your account, and you know you're just going to waste that money. So I don't recommend that to people. Oh, hi there. Guys, I got a really bright sun, so it's hard for me to see the screen there, but I see we got a couple of people waving hi. Let me know where you're chatting in from. That's the other thing I had asked before. Let me know where you're from. And I'm just doing a quick video here on prop firms and brokers. And so just curious to know, do you guys use prop firms? If you do, what assets do you trade on them, like Forex, futures, options, crypto, whatever? And what do you have a favorite one that you use? Um, so look, that's my opinion about prop firms. That I think they're a good tool, um, but I don't think you should be touching them unless you're profitable. Now there are some firms that have ones where you don't pay until you pass. That's actually pretty cool, because it allows you to use their rules. And sometimes the rules on those are even stricter because they're not getting any money up front. But it allows you to uh, use their firm and kind of practice managing risk and position sizing, um, without risking any money. So that's an alternative if you can find one like that. There are some that also allow small accounts. I've seen some where the smallest account you can get is like $5,000. Those are pretty cheap too. But still, I would even stay away from that if you haven't proven that you're consistently profitable or at least at a break even stage. Um, if you're over trading, if your position size is too large, you're not managing risk well, it doesn't matter how small the account is, you're going to breach it. And that's what they count on, because those breached accounts is, for the most part, is how they pay out. The payouts to the profitable players. It's not the only way they get their money, but it's a big part of it, obviously. So, and for me personally, I got to stop here in the shade. Let's see here. Buddy Holy Crab shares long term. Cool. Hi there, Nikos. Appreciate you guys being on. Looks like we do have 12 people on the stream. Again, guys, just chat in. Let me know where you're chatting in from. Even if you don't have any opinion on it, just say hi. But I'm just curious about everybody's use and opinion about prop firms are. Um, and like I said, you can go on YouTube and do a search, and you're going to find probably hundreds of videos, dozens at least, of highlighting prop firm failures over the last year or two or more. And like I said, some of them are pretty big ones that have gone under. I personally like to use ones that are um, based in countries that are at least, even though prop firms are basically unregulated, it's kind of the wild, wild west. Regulatory bodies really haven't caught up with them too much. But I try to, stick to ones that are in like the US or the UK or, Australia, ones where at least, I don't know, I just feel better about it. There are some that are in those real super offshore, small little islands or in China. Not overly confident about those. But the bottom line is there is risk in any prop firm, where you can get into it and then all of a sudden they roll up the carpets and you get an email saying, oh, sorry, we're ceasing business operations. And they just leave you high and dry. Now, there are some that do the right thing and they do close up, but they pay out what people are owed and they, refund challenge fees for people that recently signed up. But usually when they go out, it's, right up until the day they close, they're taking people's money for challenge accounts. And then, then they disappear and they run off with all that money. So just buyer beware. I use them. I mean, I have 4 prop accounts, 3 and 4x, one that I use for futures, and I'm well aware, and it's across 3 different companies, and I'm well aware that at any time, they could disappear, but that's okay. I'm understanding of that, and I understand the risk. And I would also say that if you do get to the point where you're due for a payout, take it. I know some people just want to let the money sit there and build up and take like one big payout. I would just take it. If you're eligible for a 500,000, 2,000, $5,000, whatever it is, just take it, because you better that money in your pocket than in theirs in case anything does happen or they suddenly change the rules. And you hear all these horror stories about them denying payouts and changing the rules at the last minute. Again, I think a lot of that comes down to the firm that people chose. You have to, pick firms that are reputable, to me, that have been around for at least 3, 4, 5 years, um, and have proven that, they're as reliable as you can expect. Again, doesn't mean they won't go out of business tomorrow either, but, just choose wisely. See how long they've been around. Do some Google searching on feedback and ratings. See where they're located. You should be able to find that in their contact info. If not, you can always message them and say, hey, where are you guys based? I do that all the time. And it's just interesting to see what they, where they're based out of. So that's what I would recommend. But they're definitely a tool. And whether you use it to supplement your income or whether you take that money and put it into your personal account, which is what a lot of people do, and they don't have a lot of money for a personal account, but they do know how to trade, and that's like golden. I mean, the thing is just knowing how to trade and be profitable. You can always find sources of funds. whether it's a prop firm or your own money. But I know a lot of people that take their prop firm payouts and they dump that into their personal account. And then, they have another account they can trade, or maybe eventually they move away from prop firms and just trade their own account. And then they don't have to be tied to the rules. That's fine too. So, um, so I would recommend, again, using firms that have been around at least a few years, that are based in countries that are at least somewhat reputable. Even though, again, regulation doesn't really exist too much in prop firms at this point, so that may not make a lot of difference. And don't do them unless you've proven that you can be, profitable, or at least break even stage. Um, unless you can find one of those ones, like I said, where they don't they don't charge you unless you pass. They have some where, like I said, you can sign up. There's no money up front. You pay later. Now the rules on those can be a little tougher, and the fees are going to be higher because they're not getting any money up front. But it's still doable, and it still teaches you, how to trade within their rules. And if you can do that, then once you do get a real account, you'll be, you should be well set up. Um, so yeah, so that's my take on prop firms. I use them. I don't promote any. I don't do affiliate links. So I always just tell people, just do your research. Research a firm as best you can before you sign up. Um, it's a very competitive market. There's so many of them, but a lot of them are just like fly by night. Just got started, set up by influencers, fake gurus on YouTube that start prop firms, quote unquote. I would stay. I wouldn't go within a million miles of those. So find good, decent, reputable ones that have a lot of traders, have been around a few years, and that's going to be your best option. Still no guarantee, but that'll be your best option. So the other thing regarding brokers. So for my personal brokers for forex and futures, I use two U.S. regulated brokers. Uh, for forex, I've mentioned I use Oanda. I've been with them a long, long time. In the U.S., we don't have a lot of options. There's only about, I don't know, 3 or 4 regulated forex brokers in the country, and we have very limited uh, leverage here by design. And you know what? I'm perfectly fine with it. Like, as an American trader, you get like 50-to-1 leverage max. Everybody's like, oh, 50-to-1, that sucks. Well, I'm telling you, if you can't be profitable on 50-to-1, then you can't be profitable. These brokers, especially these offshore brokers, give you like um, 100, 200, 300, 500 to 1 leverage. That's literally gambling, because they know that people that take those, or they give you like deposit bonuses where, oh, sign up, we'll match your deposit up to $1,000 or something. Why do you think they do that? They're giving you extreme leverage because they know that traders that are new or are treating it more like a hobby or gambling, they're going to over leverage, over position. They're going to blow the account, and they're going to collect your money and walk away. And they don't care about giving you that $1,000 deposit bonus because you're going to blow that too. So 50-to-1 leverage is plenty, you know. And I think in the U.S., I think on certain pairs it's even less. It's like 20-to-1. I think on British pound pairs and some of the exotic pairs. Again, I have no problem with that. I've never gotten a message where, oh, you can't take another trade because you're over leveraged. You've maxed out your leverage based on how much money's in your account. I've never had that. Maybe early on, but not in many years, because I don't, I don't position I don't size my positions beyond what I can afford or what my tolerance is. So, I would stay away from these offshore brokers. A lot of the ones you see like in the Caribbean or on some island in Europe, you know, totally unregulated. Even though they say they're regulated, they're not. There's no real regulations in those countries. And look, I'll be the first one to tell you, I'm as anti-government and anti-regulatory as probably anybody out there. But in this case, I'm okay with it because that's how people get into trouble, and that's how they, blow big money. when they don't know what they're doing. It's like going to a casino, and in fact, your odds are probably better at a casino. So if you're going to go to a broker that gives you 500 to one leverage, and you're just going to throw $500 in there and think you're going to get rich, you're better off just going to go find a casino. Put $500 on black or red, and just on the roulette wheel, and just take your chance, because you probably have a better shot at making money than you will trying to trade in that environment with that kind of leverage when you don't know what you're doing. So be even more cautious about brokers, even more than prop firms, because prop firms are pretty much a complete wild west. At least with brokers, um, if it's in a country where there's um, regulation like the US, then you can feel pretty safe that if things don't go your way, um, or if the prop firm, or if the broker is not going to financially survive, you're going to know that you'll be protected. And they don't let them even operate unless they have like huge amounts of reserves. That's why there's only a handful of brokers in the US for Forex, because the CFTC requires them to carry so much in reserve, millions and millions of dollars. So if they don't have that, they can't operate legally. These offshore brokers that you see in these Caribbean islands or whatever, they don't have that regulation. I mean, literally, an investor can just set it up in the basement of their office and start advertising and getting referrals and affiliate links, and people getting paid for you to join their firm, and that's what happens. And then before you know it, they go bankrupt, especially if there's a black swan event where all of a sudden they have to pay out a bunch of money to people that happen to be on the right side of the market, and they can't pay out. Guess what? They shut their doors, the system goes dark, and you're out. Any money you had in there is gone. You'll never get it back. So you can complain all you want, you'll never see it. So I would just strongly advise, I don't know where you guys are in the world, but find a broker that's regulated, um, especially in Forex. Futures are pretty much all regulated because they operate through central exchanges. It's a lot harder to get, for futures brokers to screw around. But Forex is like completely, because it's so decentralized. That's where all the scammers hang out, is in the Forex space, especially in the broker world. So, and again, you see lots of YouTube influencers that actually push their own, that are pushing brokers. Like, hey, join this broker. Here's my affiliate link. Well, guess what? They're being paid by that broker. They're being paid for every customer that signs up through their link, and they're getting paid on your trading activity. Whether you win or lose, they're getting a cut of all your trading. So where do you think their interests lie there? It's not in you being profitable. It's just getting you to click the link and sign up. So be very cautious of any YouTube influencer or guru that tries to direct you to a prop firm, or especially to a broker, because they're getting paid for that, right? Nobody's doing it for free. Um, and the broker side is really seedy. So, especially, like I said, in the Forex world, not so much futures. That's why you don't see a lot of YouTube influencers pushing futures brokers. Some of them do, um, because they're much more regulated and you're operating in a centralized market. It's hard for them to screw around and manipulate prices, and trigger stop losses and all that stuff that they do. But in Forex, you don't have that. It's decentralized. They can take their market data feed and do whatever they want with it on the back end, and they do. So just be very careful. Um, Use a good broker, even if you don't get the leverage. Um, 50 to 1 leverage is plenty. Again, if you can't be profitable with 50 to 1, you can't be you definitely will not be profitable with 100 to 1, 500 to 1, because you're just going to over leverage, over trade, blow your account, which is what they're counting on. That's why they give you that much leverage to begin with. Anyways, I got a little sweat going here. It's probably about 93 degrees or so right now. Drinking my water. I'm trying to stay in the shade here. I'm actually going to stop under this nice tree here and hang out for a minute. There's nobody out walking. It's too hot. But anyways, we got 6 people on the stream. Looks like we had about 12 for a while, but it was hard for me to see the screen walking, plus with the sun hitting my screen. But I hope that makes sense. I'm just, like I said, curious to know what, what brokers you're using, what prop firms you're using, if you have them, and what your experience has been. So, but even if you don't comment, take it for what it's worth, and just buyer beware on all this stuff. Years ago in the Forex space, there's a big broker. They still are in existence called FXCM. They're still big in other parts of the world, but they've been banned from operations in the US. Because years ago, I had them when I started in Forex, and they got nailed by the CFTC. They were telling people that they were like an ECN or STP broker, meaning they were sending your trades directly into the live market. They weren't market makers. Well, like Oanda is a market maker broker. It's you're basically operating in a sim environment, and they're taking the other side of your trade because most people are B booked, meaning they're just your order is not going out into the actual market. They're creating like a sim environment. When you start your what they call B booked, and they're just taking the other side of your trade because they know 70, 80, 90% of people lose. So the odds are like a casino are stacked in their favor. If you become profitable consistently and you're costing them money, eventually they probably will A book you and send your orders to the live market, in which case it basically takes their liability away. But most people are B booked, at least to start, always to start. But years ago, FXCM was telling people, oh no, we're an ECN STP broker, sending all trades to the live market. And people were loving that because they had this bad impression about market maker brokers, manipulating price. And again, if, manipulating candlesticks and doing all kinds of funny backroom stuff to trigger stop losses and, candle price action wouldn't match what was going on in the real market. And that definitely happens if you're using, a shady, unregulated broker. But FXCM was telling people, "Oh yeah, no, no, we're sending your trades to the real market," and it turns out they weren't, and they were manipulating. They were booking everyone and taking the other side of the trade and doing all kinds of shady stuff. And guess what? The CFTC said bye bye and kicked them out, and they can no longer operate in the U.S. So it does happen. Uh, so now we have like Oanda, we have Forex.com, we've got Interactive Brokers, and those are the only three I can even think of. There might be one or two others here, but it's pretty limited what you can do here. So, but Oanda is a big one, and Forex.com. Those are the two biggies. So, but anyways, so just be careful what broker you sign up for, especially if you're a Forex trader. Again, if you're a stock or you're a futures trader, probably not so much of a big deal, but I'd still, make sure that they're regulated. But there's a lot less funny business that can be had. But for Forex, be very careful. And for prop firms, again, just be very careful too. Do a little bit of research and see get as much information you can about that prop firm before you sign up, still with the understanding that there's no guarantee. And if you're going to have you're going to take on a lot of trading power in prop firms, spread it out over at least a couple of different prop firms. So if one goes belly up, you're not losing all your accounts. So spread it out. I mean, if you're trading with hundreds of thousands of dollars of capital, so instead of signing up for $300,000 of capital with one prop firm, spread it out over three, do 100,000 in each one. It's a little bit of a pain with managing the trade execution unless you can find a copier, but not all trade copiers work in prop firms. But at least if one goes belly up, hopefully the other two hang in there. So don't put all your eggs in one basket either with prop firms if you're going to trade with large amounts of their capital. You know. I remember prop firms are all, for the most part, 95% of prop firm trading is on sim, right? It's all sim accounts. You're not trading in the live market. There are some that will move people to live. There's more of a trend towards that. But the vast majority, you're operating in simulated demo environment. And, they're basically just, again, betting on the fact that most people will breach their account and they'll collect your challenge fee. And for those people that are profitable, obviously, they know all their stats. They will, once they have a trader that's been identified, as being profitable. What they do is they mirror their trades. So if they know they've got Joe Smith, who's profitable, consistent trader, and he's going long on the euro dollar, guess what? In their own account, they'll go long euro dollar too. So that's pretty much how they make their money, mostly on challenge fees that are fail because they know most people will fail. And then, mirroring profitable traders. And then I'm sure they have their own investing that they do to grow their money. So that's how they do it. And it's a business model that works as long as they have more people losing than winning. So that's how they can operate. But they need a lot of volume. They need a lot of traders, which is why they're always marketing specials, discounts, promo codes, because they need a lot of people. They need to collect a lot of challenge fees in order to build up their accounts, their own accounts, and pay out the people who are profitable. So it's a good model, but obviously it has pitfalls and it has things you got to be aware of. So anyways, guys, I'm going to leave it there. We dropped off most of the viewers. So I hope that was helpful. Any questions, comments, leave them down below. Smash the video, the like button, subscribe to the channel, and I'll post the video I made about today's action sometime early this afternoon. All right, guys, take care, and I'll talk to all soon. Have a great weekend. Peace.